The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the May, the 12th or the 13th? It's the Magical Monday edition. That much I know. So welcome to the Trader's Edge Show. Thanks so much for joining us. Good to be back with you after being gone just for one day out there. This week, though, I will be recording shows today through Wednesday, and then I will be on vacation from Thursday and won't return until Memorial Day. So be off for about 10 days out there. So would love to hear from you. You can send me an email, steve@tfnn.com, and I'll be happy to go ahead and review your charts for you and help you, assist you in any way that I possibly can. Of course, if you're inside our Tiger's Den, well, then any ping will do. So let's go ahead and get this show started here on a magical Monday. Of course, we've got quite a rally going on. Right now, you've got the Dow up 991 points. The S&P's up 151. NASDAQ up 646. The Russell's up 58. The transports are up 876. The SOX 268 points. NASDAQ Composite 626. New York Stock Exchange up 343. The weakest is the rally inside the New York Stock Exchange, up a little less than 2%. The strongest coming from the transports, up 6.25% there. You've got gold that's trading off $100. Told you it would trade down at least $100. Silver's off. Silver's actually off 13 pennies, holding up pretty well. 32.77 there. Light sweet crude is up $1.53. Natural gas up 16 cents. It's a 4% move to the downside. Copper futures off just 3 pennies right now. Let's see. I don't see any other signals out here. Looking at the TD9 counts, if there was anything for us to take a look at. So I don't see anything there. So let's just start by taking a look at the daily equity future contract. So we'll begin with the ES Mini that's in the upper left-hand side. And what you're going to see here, in fact, let's just simply expand out the chart. We'll go decorate it ourselves, you and I together here. What we're going to see is a new A to B equals CD pattern to the upside. Potentially out here. Now, I don't know if that's a 0.382 retracement or not, but what we've got here is a TD9 count top that's going to be negated today. It'll be negated so long as price closed the day above 57.24.75. So anything can happen, but at this stage here, that pattern will get negated. Now, what it's really suggesting to you and I is to make its move up to the 6,275 level. I would say what price needs to do is clear one last resistance point, and that was formed by this bearish engulfing candle back in March 26th. So when you get a bearish engulfing candle, it's the candles that it engulfs. It's the high of those candles that engulfs. That becomes that resistance point. Well, that would be the day earlier, March 25th, and that high out there, 58.3725. Watch that. So far, that's acted as resistance. If price closes above that, that's a signal that we're likely to head higher. Now, there's a couple different A to B equals CD patterns you could draw out here. So if we just went with the conservative one that I know we have, most certainly a proper retracement out there. You know, this is what it would look like. I'm just simply going to go ahead and move the A to B point over to the C point. So at a minimum, what we have out here, I'm going to try to do that. There we go. At a minimum, what we have out here, you can see we've reached the one-to-one price projection level. And so if you were to see a bearish reversal candle, well, that would form a Gartley sell pattern. And that would most certainly suggest caution. What it would suggest, technically speaking, is a pullback to support, which at this stage here is going to be the top of its daily profile. That would be level number 1. And that's at the 56.97 level. But at this stage here, it looks like it's rally on with price making its way up towards that 6,200 level. That's the daily time frame chart for the ES Mini. If we take a look at the NQ, you're going to see a similar set of patterns, but you don't see a TD9 count breakdown resistance level that price is headed to. Now, in the case of the NQ, it is trading above the bearish engulfing candle from March 26. That becomes a resistance point. But if price closes above 25.3675 or 27.71 today, then that suggests a further rally. And that rally would take us back towards its all-time highs out there. The DAX, by the way, did make a new all-time high today. It has since sold off a bit. It's completing a TD9 count top. We we may be able to take a look at its charts out there. We know that the NASDAQ and the DAX, directionally speaking, correlate to each other typically. But at this stage here, the NQ is suggesting it wants higher price. We take a look at the Dow Equity Future Contract. Really the same signal there. It's going to go ahead and take out a TD9 count top today. That is, unless the markets sell up. So let's not go with the market selling off at this stage because it doesn't seem like an outcome, but it could be. But at this stage here, we're going to negate there. It's going to negate a TD9 count top. Now, its next resistance point happens to be another swing point or a TD9 count pattern for March 26th. And so that high is very important, which is 43,148. The low of that swing point is at 42,636. The high today, 42,456. So we're just a couple hundred points shy of testing that swing point. So watch that as price moves into it. But the key here is that in order for the Dow to suggest to you and I that price wants to make a move back towards its TD9 count breakdown area, that's at 44,494, price is going to have to clear that March 26 swing point, 43,148. So March 26 swing point set up both for the ES Mini, the NQ, and the Dow. If we take a look at the Russell 2000 also likely to negate its TD9 count top today. Just needs to be able to close above the high of 2034.30. Price made a run for this swing point high back on March 25th, so it wasn't the 26th for it. So far, it's rejected that level. So in order for the Russell 2000 to suggest to you and I that price is going to make a move towards its TD9 count breakdown resistance area, that's at 2307.80. What we need to see is a close above 2128. Out there. This is going to be, so with regard to consecutive days, the upside to the downside out there. Friday was one day wonder to the downside. So very strong, still very strong bull market out here. Would certainly not be surprised to see at least another day's rally. But of course, we need to see the close. Now, let's move over from the daily equity future contracts, which I'll go ahead and leave open, and I'm going to go ahead and put up the weekly time frame chart. You know, when we take a look at an instrument, we'll look at NVIDIA, Tesla, crude oil, natural gas, stocks, MSTR, PP. You know, we're going to take a look at daily, weekly, monthly time frame typically out there. It's important to understand those time frames. Why? Because I could have come out here and just said, look, it's guaranteed that the ES is going to rally up towards this TD9 count breakdown resistance area for the daily time frame. I didn't say that. We looked at the swing points on the daily time frame. Now, in the weekly, we need to also understand that what price has done this morning is run right smack dab into the top of its profile. The top of the profile is 58.65.50. Basically, we've been to 58.65.75. So basically, and that was, since it says on my screen 60, it either rounded up to 75, which is what it hit. So it really hit the top of that resistance area. Now, if price can close above that on a weekly basis, look, if we start closing above it on a daily basis, that's a positive. But the ES Mini ran right up into resistance out there. So that should perk up the bears out there. So first of all, if you're wondering why did we get a short-term pullback, well, now that you know where that profile levels, well, that makes a whole lot of sense out there. The NQ, the question is, who's driving this train out here? Is it the NASDAQ that's driving the train? Because if it is, price is traded above the top of its bearish structured weekly profile, which top of that profile is at 2373. So if it's driving the train, then it's going to drive that train all the way up to, I mentioned the daily time frame does not have a TD9 count breakdown resistance level, but the weekly does. And so its price target is basically back towards its all-time highs. In this case here, the breakdown resistance area is 22,558. In the case of the Dow Equity Future Contract, trading into its weekly sell zone. That's sponsored by that bearish structured profile out there. And the Russell 2000, right smack dab into profile resistance, 2132.90. Take a snapshot of this screen, folks. You got to understand where intermediate term resistance is as well. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're going to get right into the requests out there. We've got a number of them. I want to be able to get to each of them. The first one coming from Tom G, who'd like to take a look at NVIDIA. His question basically is, what do we think about NVIDIA? Well, NVIDIA is negating a TD9 count top today on its daily time frame, and price is trading above its TD9 count breakdown resistance level. So that just simply is a bullish outcome. Now, what price is dealing with on the daily time frame, Tom, is really, I suppose, the last area of resistance right now, which is a swing point high for March 17th. That high out there is at 122.89. The swing point had 255 million shares that traded that day. So far, in less than 2 hours of trading, we're at 90 million shares. So that's a pretty solid, strong move. So if you can get price to close above that 122.89, that would then suggest a move up to 128.20. 128.20 is the top of the weekly profile. If price can close above 128.20, well, then we could get back to the 146.89 level. So what do we think about NVIDIA out here? I think the daily looks very promising, but that swing point is what you're dealing with here, and you really want to see it close above that March 17th swing point, again, 122.89. So, Tom, thanks for writing in about that. You also wanted to take a look at Tesla. So let's get over to the Tesla chart out here, see what it is signaling to both you and I. Tesla right now trading out at 318.54. It is forming an A to B equals CD pattern. It actually did it on Friday out there. So the swing point that it took out had volume of 151 million shares, and on Friday, price took that out with 132. Today, so far, we're up with 58 million shares. So now that's most certainly has volume in it, as long as it keeps up, you know. So here's what we've got. You've got an A to B equals CD pattern to the upside, Tom. So let's draw in that A to B point. That was that was a swing point that we're taking a look at. We're just simply going to move that A to B leg over to the C point. That's the lowest low that forms after that B point. That was the trading session out here from April 30th, and that's going to get us up towards the CD9 count breakdown resistance level at 362. 362.30. The weekly time frame chart is confirming this move as well. The reason it's confirming this move is because price right now is trading above profile resistance, 270.11, and it's now trading above its green oscillator and change line. When you trade above a green oscillator and change line, that tells us we have a rising price oscillator above zero. Those just simply are bullish conditions. So you're headed towards 362.30. If you can clear that, 433.20 on a monthly time frame. Price is trading with inside. It's trading above profile resistance and its green oscillator and change line. So you're very bullish on the monthly time frame. You're very bullish on the weekly time frame. You've got an A to B equals CD pattern on the daily time frame. So Tesla looks like it wants to move back towards its highs out there. You also had a request to take a look at light sweet crude. Let's put this chart up on our screen here. Right now we are trading the June contract. So let's get, at least for another week, I believe, let's get that up here. We take a look at, so you got a nice by the D-point bottom, a Rhodes Momentum Indicator bottom, price trading above profile resistance out here on the daily time frame. The issue with regard to the June contract for light sweet crude is really the weekly oscillator and change line. So we've rallied right up into it, it being right now about 63.16. I say about because price is going to go up and down by a few pennies as price moves up and down. But if price can clear that 63 or the red oscillator and change line on the weekly time frame around, why don't you use today's high? That would be a good number to use. If price is able to close above the high that we put in today so far, which is 63.61. You're off to 64.92. That would be the center of its weekly profile. If you can clear that, then you're looking at a move to 70.05. So the daily time frame looks very good. It's that weekly oscillator and change line that you're dealing with, Tom. So that's what I would be watching. Then you've got those profile levels, 64.92 on the weekly. You also have 64.92 on the monthly time frame, which is the bottom of its profile. So that is a very key number for light sweet crude, at least on the June contract, to be able to hoist itself above. And if we get above that, that would say that last month's move to the downside, testing $57, was a false break down. But I can't say that. I did say that, but I can't say that. I won't say that. What I'll say is simply that price pulled back to its breakout level, found support at 57. You can't bust them to the downside. Price will try to bust them to the upside. That I can say, because that's what Obi-Wan would say. So that's what's going on with regard to crude oil. We've got a question with regard to natural gas. So let's put up its June contract as well. This is coming in from Joe. He'd like to be able to get back into the trade out there and is kind of asking where and when, by whether it's Boyle or whether it's UNG. Really want to take a look at the natural gas contract. So in this case here, Friday was a one-day pullback. Thursday was a one-day pullback. Friday now a one-day rally. Now we've got another one-day pullback. This is an inside bar out here. And what happened on Friday inside of natural gas was it went ahead and triggered an A to B equals CD pattern to the upside. And that's going to take us back to that TD9 count breakdown area. So I've drawn in the A to B line. I'm hopefully going to capture that line itself. We're going to try one more time to capture it. There we go. Move that over the C point, and you'll see it gets us up towards the TD9 count breakdown level, and that's at $4.26. Now, what's transpired here, though, why did price rally or pull back this morning? Because it ran right up into resistance. That's the importance of understanding what's going on daily, weekly, and monthly. Because on the weekly time frame chart, it really wouldn't have been a surprise to you to know that at $3.84, that's going to be resistance, the bottom of its weekly profile. Price has been below that level for more than 2 consecutive sessions, so we know that's a strong resistance area. In fact, that's where counter trend moves would come to an end. But the daily time frame chart is saying that today's bar is just an inside bar, at least at this day. It's a key reversal bar. Hold on, let me check. Let me see here. The low was 361.3. The low 3. I take that back. So you got a key reversal bar, but that doesn't confirm anything out here other than it just creates a resistance point at today's high. But the resistance point is really the bottom of that weekly profile, $3.84. So you're looking to get back in, Joe. I would wait for a second day of pullback out there. And really in the natural gas contract, if price pulls back, tests and rejects its oscillator and change line, currently printed on a daily time frame at $3.45. That could be another area out there. But I'd wait for a second day of retracement out there if you're looking to get back in, which you are, inside of Boyle or the UNG. So hope that helps you out. Thanks so much for your request. Nicholas writes in and says, hey, Stevie, can we take a look at the stocks? And the question is, keep it or exit it? So if we take a look at the stocks out here, today right now, not the stocks index, the stocks ETF, which formed a nice TD9 count bottom pattern, it is traded above its TD9 count breakdown resistance level for the daily time frame. So what we know about that, Nicholas, it's all out bullish. Why would you sell? No topping pattern at all. So now we got to go to the weekly time frame chart. Are we up against resistance? We're very close to resistance. Resistance here, Nicholas, is at 209.93 out there. That's the top of its weekly profile. With regard to the monthly time frame chart, its next resistance area would be at 213.86. So do we have any kind of sell signals anywhere out here? I don't see that. And today's close, if today is able to close above 204.06, that is a beautiful thing out there. Couple different potential A to B equals CD patterns that we can type in here. We really don't need that because the next resistance level at this stage here is the key area that you're going to focus on. And that's up at the 209.93 level. So what I can share with you is the charts are bullish. Period. But we do have some resistance up top out there. And so that's what I hope that helps you out. With regard to the stocks, it looks like this is trade higher maybe for 4 or 5 consecutive sessions out there. But everything looks hunky-dory at this moment in time. Steve Rhodes with TFNN. We come back. We're going to take a look at MSTR for David in Panama City, PPTA for Lee, NXZ for Lee as well, the GDX for Ron inside the Tiger's Den, ITRG for Jambalaya, and NVO for Fletch. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we got the stock charts for MSTR up on my screen. This is for David in Panama City, and I believe, David, I think you're in an option position out here that is expiring this week, if I'm not mistaken. So on Thursday of last week, what MSTR did on a daily time frame was went ahead and completed a TD9 count top. So your key resistance level that was tested on Friday, was tested this morning as well. Your key level of resistance is going to be 423.11. If price could close above 423.11, that would suggest higher price. And higher price could be up towards the 454.88 level. That's the top of its monthly profile. Above that would be 471.56, the top of its weekly profile. Now, even though it's got a TD9 count top, it's really somewhat of a neutralized signal right now. And that reason is because price is trading above profile resistance, 397.83, and it's also trading above its green oscillator and change, which is just slightly below that. So, and any counter trend move to the downside would find support, or should find support, between 385.70 and 397.83. Now, I shared that with you because others are in this trade, just not in an option position. But you need this data as well, at least understanding where support is or resistance. And right now, what you're really dealing with, the resistance is going to be that TD9 count top. So again, let me give that to you. That's, oops, sorry about that. That, again, that number, 423.11. But you're also trading above, a key support area, which is 397.83. Now, the weekly time frame chart, which you hinted at in your email, is going to likely form a TD9 count top this week and complete it next week. All it needs to do is close above bar number 5. So unless this thing takes a major hit, it could. It's got a daily TD9 count top. But as long as price on Friday closed above 320, it closes above 317.20, you will have a weekly TD9 count. Now, it may not be the high that forms until the following week because it can be the high of the TD9 count, but you'd have a daily TD9 count, a weekly TD9 count, and a monthly chart that's just kind of trading with inside its profile levels, ranging from 146.46 all the way up to 454.88 out there. So that's what's going on. We take a look at the MSTR. Today will be day number 1 of a pullback. Tomorrow, likely, maybe it's going to be day number 2 of a retracement out there before it would start to take off topside again. But, if it does that, you can take out the daily TD9 count top because the weekly says I don't really need to form my top until next week out there. So, David, I hope that helps you out, as well as everybody else that is trading MSTR. LB wants to take a look at the PPTA, which is getting hit this morning. And the question is, where's an entry point? So, yeah, the TD9 count top that formed looked like maybe the beginning of last week out there. Each of us can see it today. You're getting a confirmation of a Rhodes momentum indicator top. It doesn't look good. And when I say it doesn't look good, I mean it's because price is pulled back and is already trading below its breakout level. LB, and that's at that 1264. That would have been, for example, if price wasn't trading below that, that would have been one level for me to give to you. Now, it's not the end of the day out here. Price could close back above 1264. If it does that and holds that level, that's a key message to you. We don't have that key message right now. I'm going to go with the assumption that it doesn't close back above 1264. So where's the next level of support? Turns out at about 1041 on the monthly chart, and we know as price goes down, that number is going to go down as well. That's the monthly oscillator and change line. That you got 1041 there. Now the weekly, you've got profile support or potential profile support at 1043. So my suggestion is let's wait to see what happens as price is pulling back towards 1043. Of course, I may not be here. Again, I will be recording shows this week, Monday, Tuesday, Wednesday, then on Thursday and Friday the following week, and then that following weekend is Memorial Day weekend out there, and I'll be back on that Tuesday. for shows. Other areas of potential support for you. If 1043 doesn't hold, then you could easily get down towards a 916, 833, 806, 753 level. Those are the areas that you're looking for. There's no daily bottom pattern that I see out here, so it's really going to be dependent upon what transpires over the weekly and monthly time frame as far as support goes. So LB, hope that helps you out. You also want to take a look at NXE. So let's get NXE up on our screen out here, see what it is doing. NXE, we got a request for NXT. So we take a look at NXE. Here's what we like about the daily time frame. The daily time frame negated a TD9 count bottom pattern back on May 7th. So that was last Monday or Tuesday out there. And that suggests a further run higher. What it's really done is also triggered wave number 7, which is letter G out there. In fact, we've got a peak G inside the Tiger's Den. So it's basically forming a potential peak G. Now, in order to form that peak, as Peak would tell you, you've got to see a lower high. So you do have a daily topping pattern to be aware of. When we look at the weekly time frame chart, which formed a TD9 count bottom, and prices now run up. You close just above profile resistance on Friday. When I say just above, Friday's close was 573, the top of the profile 572. So closed above a profile for 1 penny. Does that really do it for us? Heck no. So now we can see his prices back in that area. So you know that is a resistance point, that 572, 573 type area. And so you got a daily potential wave number 7 top, a weekly just consolidation with inside the profile. So this is suggesting that you could see, LB, you're looking for an entry point. You could see a pullback to support on the daily time frame. The support range would be, because it was a bearish structured daily profile, your support zone on a pullback, if it's only a counter trend move, that's why you'd want to take a long position, would be between the range of 515 to 537 out there. So I think that's the area for you to be watching and observing. It may just be 537, maybe 515. If price gets below that level, 515, then you'd be looking for a move back to the 483 level. So that's what we see when we take a look at NXE and PPTA, and I do hope that helps you out. As always, thanks so much for writing in. Next request coming in from Ron, who's really asking about the GDX, where it might go to, gold's weakness. Is this the end of it? And so let's go take a look at this set of charts here, this triple set of charts, which we'll take a look at gold at the left, silver in the center, the GDX on the right. So what do we know about gold? We take a look at daily and weekly time frame. And I'd mentioned this earlier, but we didn't get a chance to take a look at the weekly time frame for gold. Now you can see it. Gold's got a Rhodes Momentum Indicator top on the daily time frame. Price is testing profile support. And profile support for the daily time frame is down at 32, 33, 30. The weekly time frame chart completed a TD9 count top last week. Price is testing the center of its bearish structured profile. That's at 32.10. 32.10.30 to be exact. So what do we know? Here's what we know. A weekly chart below 32.10.30, Ron, is then going to suggest a move back to the 28.94 to 29.70.50 level out there. So that's a number to be watching, 32.10.30. The daily so far has held support. Your question was, do I think this is over, the move over? Basically, I think something like that. You know, it's just the move over in gold. Right now, today, the answer is no. Price is just holding the support area. And it's likely to do that until we hear what comes out of this potential Ukraine-Russia meeting out there. Gold saying, I'm not necessarily buying it just yet. Steve Rhodes with TFNN. We'll be right back. We'll finish looking at gold, silver, and the GDX.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking gold, silver, and the GDX. So we know that gold is holding, at least at this stage of the game, is holding support. I expect it to at least remain like that, until gold sniffs out or understands what this meeting brings out there, wherever they're having that meeting between the Ukraine and Russia. At least that's what it's signaling to and I at this stage of the game here, Ron. If we take a look at silver, really got a similar message there, and that silver is holding strongly. It's holding that top of that profile, 32.43. So that's a key number for you to watch. Your price down, it's holding that level of support. Resistance is the weekly oscillator and change line at 33.22. So very narrow range out there. We take a good look at the GDX. The key level to be watching is a price point at 46.73. That's its TD9 count bottom. That's also its swing point for May 2nd. Now that swing point May 2nd at volume of 14 million shares. You today have already done 17 million shares. So you're pushing into that swing point with volume. Even if price doesn't bust through it, you're going to retest this swing point out here. Well, if it closes inside there, that's a potentially logical statement out there, but you're pushing in that swing point. If price closes below 46.73 today, it will trigger a daily A to B equals CD pattern to downside with a price objective somewhere in the 44 level. The weekly time frame has a sell the D point top. Price here is testing its green oscillator and change line. In fact, we're trading below it being 47.37. So the next key area of support, you've got one that's 46.73. The second is going to be 46.10. And 46.10 is the top of its daily profile. The top of its weekly profile. My apology. So you've got some support areas to watch. 46.73. And 46.10, you close below 46.73, you confirm an A to B equals CD pattern to the downside with volume, but price still needs to close below that top of that weekly profile at 46.10. So gold's weakness is really just pull back to support at this stage of the game out there. I still suggest being very careful, very cautious, because the monthly time frame chart is suggesting, because we've been up for 4 consecutive months on gold. I'm not showing the monthly chart here, but I have shared that with you. That is suggesting that gold is getting ready for a 2-month retracement out there. That would just simply be normal. So thanks so much for the request. I'm going to go ahead and try to close this chart down, and then it's going to take us somewhere. This will take just a moment to free up these resources. And then we're going to go to take us back to the main page. And we're going to go to take a look at ITRG. This is for Jambalaya inside the Tiger's Den. Give me a moment here. Let's do it on the set of charts here. ITRG. Let me just see how quickly this populates. And here I've got the daily, dance steps, the cadence, and that's very nice to have. And I've even got it for the 30-minute time frame chart. We take a look at ITRG, Jambalaya. You've got a TD9 count. I take that back. What you've got right now is a Rhodes Momentum Indicator top with price trading below the bottom of its daily profile. That's at $1.64. If you stay below $1.64, that means tomorrow as well, then what that's suggesting to you and I is price could pull back to $1.16. That's what the daily chart says. The weekly chart says, I don't know what the heck you guys are talking about. Why doesn't know what we're talking about? Because it's got a bullish structured buy zone, bullish structured profile with between the range of 154 and 163, and that's what price is trading within right now. It also has support at about 151, which is the weekly oscillator and change line. But you do have a Rhodes Momentum Indicator top for the daily. You do have a TD9 count top for the monthly, weekly, and the monthly has found support at its TD9 count breakdown reaches at $1.79. So to the upside, your key level is going to be last week's TD9 count high at $1.95 out there. So if you close above that, then you're off to the races to the upside. But right now we're looking at downside. And the downside says you've got to watch this 151 level like a hawk, because if you close below that, you're back towards $1.03, $1.16. Now, this is going to be day number 4 to the downside. If you get another day to the downside tomorrow on the daily time frame, that's suggesting to be extra cautious out there. But that extra caution, you still have the strength of the weekly buy zone out there with regard to ITRG. I'm not trying to make it hard to decipher this chart, just knowing that you've got that buy zone on the weekly time frame chart. And on an intraday portion for a 30-minute time frame chart, we don't have any kind of a bottom signal or anything along those lines out there. So topping pattern daily, weekly, and really monthly time frame, and price testing that key area of support. We're just going to stick with $1.51 out there. So, Jam, hope that helps you out. Fletch wants to look at NVO. Let's go ahead. This is populated pretty quickly. So let's go ahead and put NVO up here. Nice to have just that 30-minute time frame chart as well. Steve is going to take a swig of water. Not that you really cared. You've got a nice Rhodes Momentum Indicator bottom on the daily time frame, Fletch, with price now trading, looks like below its daily profile out here. So just letting these charts fully populate. Now let me open up the daily time frame, get a little bit better view as to what's going on here. So what is going on here? All that I can share with you is that on Friday and Thursday, price closed below the bottom of its daily profile. And that really suggests a run for the 63.27 level. That's its oscillator and change line. Today's rally, that's very nice, but you got to get it close. You got to get back inside the profile. 67.07 is the number to be watching there. If price stays below 67.07, daily is saying they may still want to pull back further. Now, the weekly time frame chart is found support potentially, and that is its weekly oscillator and change line. And that's at currently printed out at 63.57. So I'd certainly watch 63.57. If price closes below 63.26, the daily oscillator and change line, then that's going to get us back likely into the 59.56, 62.11 area out there, Fletch. That is its buy zone for the weekly time frame. The monthly is likely to form a TD9 count bottom pattern by month end. The pattern actually doesn't complete until June. Because we are bar number 9 right now. Got a nice monthly hammer candle out there, kind of suggesting to you and I that the TD9 count bottom pattern is in. On a hammer candle, one of the things you like to be able to do, if you can, is to buy when price pulls back basically to the center of that lower wick, the lower shadow out there. So you can do those math calculations, figure out where that midpoint is. That could be an entry area. We've seen a nice little 30-minute rally out there, but price is running resistance at the center of that bullish structured profile out there. So that could be where the counter trend move kind of comes to an end. That's between, 66.90 is the high of that. It's between 66.63 and 66.90 out there. So watch the daily. Watch that first level. the bottom of that profile. If price is unable to get into that, then that's going to suggest a retracement or a further retracement out there. So Fletch, hope that helps you out with regard to NVO. Do it inside the Tiger's Den. Wants to take a look at a koozie, but wants to do it via VUZI. So we take a look at VUZI out here. What is it doing? Well, we'll find out here momentarily as these charts populate. We may have to re-review this when we come back to this break, but we still have a number of requests, so let's try to stick with this. So with regard to VUZI, this is testing the top of its daily profile. We're trading at 209. The top of the daily profile is at 208. A close above 209 should get us to the TD9 count breakdown resistance level, dude, and that would be at the price point of 286 out there. The weekly time frame chart has got a TD9 count bottom, but price found resistance where it should have if it was only a counter trend move. That's at $2.22. It did that 2 weeks ago. We'll finish looking at VUZI when we get back from this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at the VUZI before we went to the breakout there. We're looking at a 30-minute time frame chart, which went ahead at 11:30 and completed a TD9 count top. That requires a close above 209 when we come into the 12 o'clock time frame. So you want to watch that out there. Price closes above that. That says that the rally should extend itself. The rally extending itself, that would say that the price would want to move up towards the 222 to 235 level. That's coming from the weekly time frame chart. So that's what we see when we take a look at the VUZI woozy out there. 235 was also the daily TD knockout breakdown resistance level. So hope that helps you out, Peak. We're going to go take a look at SOUN, I believe. Yeah, SOUN. This is also for Peak, G inside the Tigers End. So Peak, you love the fact that price right now is trying to take out its daily TD knockout breakdown resistance level. That is at the price point of $10.15. So if you close above that, that's a bullish signal. It's trading above a swing point that has volume from April 25th, has volume of 26 million shares. You're trading above it right now with 55 million shares. You have now got an A to B equals CD pattern to the upside. Here's the key level of support. Well, if you're taking out that swing point with volume, the question is, well, why did price stop where it did? 11.15. 11.15 is the top of the weekly profile. So that's the key level that SOUN needs to close above in order for that beautiful A to B equals CD pattern to the upside to really come to fruition. So that's what's going on there, Peak. Hope that helps you out. Let's go take a look at NXT for Eddie out here. NXT is trading at, come on, Pop. Oh, that's Orgo. Oh, I know what I did. I screwed up. Okay, sorry about that. I'm going to unscrew, or try to. Where can I do that? Right here. Just trying to stay in line. So NXT out here. Come on, populate quickly for me. I think I really did screw it up. Sorry about that. But NXT right now is trading at the top of its daily. No, that's woozy. I can't do it. Well, folks, I'll start off with NXT tomorrow. That's for sure. Stay tuned for all the great programming. Thanks so much for joining me today. I'll look forward to seeing you again tomorrow, 11 a.m. sharp. Have a magical Monday. Actually, I'll be back later this afternoon with Jacob at about 3 o'clock. Take care, and we'll hopefully see you a little bit soon. Bye-bye.